Banks are failing, and we are potentially looking at another explosive rally up for Bitcoin, exactly like what we saw around the middle of March, where Bitcoin actually, right when SVB and Signature Bank, I believe it was them too, when they both collapsed, Bitcoin started shooting up, and it actually managed to set from low to high, basically in one leg, a 48% move, a 42% move, depending on how you measure it, which was extremely impressive. And we're now looking at the same thing happening. Pacific West Bank, let me just hide my face so you can see this. Pacific West Bank here, PacWest. We've got Western Alliance, we've got Metropolitan Bank. Guys, it's a bad setup right now for these banks. We're looking at an 81% drop for PacWest here, followed by 28%, followed by 45% gapping down. This is just absolute carnage taking place across the banking sector in the US right now. And I want to be very clear, a collapsing stock for a bank doesn't mean that the bank is going to die. It just means that people don't want to hold the stock anymore. So it doesn't necessarily have to mean that one thing leads to another. But generally, if people are selling off a stock, they're not doing it because they're stupid. They're doing it because they think the stock is going to die, right? Especially in instances like this, where you've got banks collapsing left, right, and center. And this is a huge deal for Bitcoin because of what happened last time. Gold right now, as I've been warning you guys, is setting new all-time highs actively right now. We set a brand new all-time high yesterday, and we are doing incredibly well with our price action right here. Exactly as I warned you guys about on this YouTube channel. I've been telling you for a while that gold is a very strong buy. I told you guys that I picked up physical gold for the first time in my life, which I'm super, super proud of, and gold has been exploding after that. Now, if you did miss this, you don't have to worry about it. Gold is a slow-moving asset. I'm hoping that it's going to come back down. The more it comes back down, the more explosive it's going to be, when it does inevitably really start breaking these highs and setting, hundreds of dollars higher highs for gold right here. And to prepare yourself for it, check out BingX. The reason I've been talking to you guys about this is Bybit is implementing mandatory KYC within less than 4 days now. It's a super, super short time frame. But if you want to trade these markets on BingX, you have access to commodities like gold. You have way more than that. You've got crude oil, silver, all sorts of other things, natural gas, but you've also got indices, S&P 500, you've got Forex and individual stocks. You can now trade Tesla, Apple, Amazon, all with a Bitcoin deposit and without even doing any KYC using BingX. So if you guys have been affected by the Bybit KYC news, or even if you're not and you just want extra opportunities to trade, check BingX out with the link in the description down below. And when you do sign up using this link in the description, you're going to have over $5,000 in bonuses available to you as well, just for signing up using my link. So it's going to be close to the top of the description, right below the 𝗬𝗢𝗥𝗙𝗧𝗜 daily channel. This is where you get all of my altcoin analysis. We're going to be doing something on Pepe tonight, so that's going to be pretty cool. So definitely check this out if you're interested in getting these huge bonuses with BingX and being able to trade crypto in addition to all these other markets. But back to the Bitcoin chart right here, and the reason that everything here that we're seeing is so important is because of these banks starting to potentially collapse. Now, this actually couldn't come at a better time. I've been talking to you a lot about the fractal, and here's the thing about the fractal, right? I don't actually want to talk about the fractal. I try and convey this a lot when I speak to you guys about patterns like this, because they're not very scientific, right? And so they're not I want to be a more rational technical analyst. I don't want to just kind of pull shit out of the sky and then say that this is legit. And that's kind of what fractals are. You're just kind of grasping at straws in a sense. It's not a particularly great form of analysis, but the reason it's strong is because you're just kind of mirroring characteristics that the same asset has exhibited in the past. That's what we're looking at when we look at fractals. We're just looking at the same characteristics that Bitcoin showed in the past. We're seeing them reappear right now. And again, I don't actually want to be giving this fractal too much credit, because I'm just not such a big believer in them. But guys, you kind of have to just stop and just appreciate this for a second. It's almost like a massive setup for Bitcoin is just kind of coming together right now, and I've got to show you what I mean here. So if we go back to what happened with Bitcoin in the past, at this pattern here. I mean, it's really looking very similar, right? So you've already heard me talk a lot about, I mean, you've been subscribed to this channel for a while, hopefully, so you're going to know quite a bit about this analysis already. So you're going to know about how, Bitcoin, with this rally has formed, the same kind of explosive move up, followed by the same kind of consolidation pattern, followed by, you've seen me draw this out a million times. And the thing is we're now just like here. And this was back in 2020 when Bitcoin was trading at $10,000. This is directly what happened before Bitcoin breached its all-time high at 20K and then went up to 42 and then went up to 64, pretty much all in one big macro leg, and it all kind of started from this pattern. And what's really compelling is that if we're about to see a new wave of banks collapsing, well, Bitcoin is coiled up right now, right? Look at Bitcoin's, chart pattern right now. It's just coiled up. It's getting ready to explode, exactly in the same way that we saw last time. Every single step that precedes where we are right now has been exactly the same. Like, it's kind of driving me fucking crazy, guys. Like, it's too obvious, but at the same time, it's just like, it's hard to say that Bitcoin is going to start rallying up massively right now, right? I mean, we can talk about 32,000, 34,000, but this kind of chart pattern, the setup that Bitcoin had in the past when it did exactly the same thing, took Bitcoin up by a factor of 6 times. It took Bitcoin from 10K to 64K. And I don't think that we're going to see that kind of gain right now. I told you guys about 180K that would be our target if we ended up doing the same thing. That's not going to happen, right? I mean, it's pretty clear that we're still, in a bear market rally. So it's a confusing situation because at the same time, we've got the chart just primed for it. And we're starting to look at these banks collapsing. And if we go a little bit further and just look at what happened here, I mean, this is the same chart that I just highlighted for you. We're looking at like 43% to the upside when Signature and SVB collapsed. And now we've seen First Republic collapse as well. They had they got acquired by JP Morgan or something because they got bailed out by the government. I don't know the exact details, doesn't matter. But what we're looking at here very clearly is if the same thing repeats now and we're about to see a new wave of banks collapsing, well, if we manage to pull off the same gain, that puts us at $41,000. It's a ridiculously high price level, and it means that we would be clearing so much of our essential resistance on this chart. If we take a look at what this resistance actually looks like on the daily time frame, it's definitely something that you kind of have to stop and just appreciate for a second, because there's a lot of trouble looming overhead for Bitcoin. Quite clearly, a strong area right here on the chart, another very strong area here. We've just got resistance everywhere on this chart, to be honest, guys, in the $30,000 range. And if we were if we were able to pull off the exact same move that we did last time, if we do it again now, and you can see it with the VPVR as well. In fact, I think what I need to do is use the tool for this, as I did last time, because I only want to look at the price action that happened between these dates. And you can see quite clearly, the point of control at this red line. There's various spikes. There's another spike kind of here. I can just kind of move these lines around to sit on the spikes quite nicely. But bottom line, what's very, very clear, I don't even need these lines, to be honest, is that, basically at this blue line, which is, again, like almost exactly where we're trading right now. The analysis is the same the last time I showed you this chart, because we haven't actually done anything different. Basically, right up until this blue line, from this blue line up until this red line, there is a huge area of resistance. It only kind of tapers off after that. And it's only when we cross the blue line at 48 that we're actually going to be, in a pretty good position. And you might be like, well, Sammy, that's really far away. There's literally nearly a 2 times gain to be had before we get there. And yeah, well, that's Bitcoin. Bitcoin's just a really volatile market. So the key levels that need to be defined will tend to be at ridiculous price levels. And that's because Bitcoin has ridiculous price action. That's all there is to it, really. Now, that doesn't have to mean that you sit out on the gains, right? I've been long on Bitcoin since down here. You guys have seen the evolution of that position and how I've pulled over $200,000 in profit. Yes, I did trade this on Bybit, and as I've been saying, I'm going to continue to use Bybit even after the KYC news. But of course, I like having other options. And if these other options mean that I have access to traditional finance markets, then I like that way more. So I'm going to keep using Bybit. I'm going to keep using OKX. You guys know the deal. I spread my risk, right? I use different exchanges for different things, and I like to have that flexibility. It's good for me to have. It's always been something that I've enjoyed doing, and it's served me very well in the past, right? Like when exchanges have had problems, I'm never affected by it. I'm never hurt by that kind of thing because I've just spread out my risk really well. So, it's always a good idea to explore different opportunities, especially when they're giving you such cool bonuses like, 5K, for example, with bingx, which is very, very cool. But this area here definitely, is a big deal. And if Bitcoin is able to bridge it, that's kind of what we'd be looking at, is rising up above $40,000, clearing all of our resistance. And we'll talk about that short-term chart just in a second here. I don't want to get there just yet. But, the thing about these banks, and like I said, what this could lead to is nothing perhaps direct for Bitcoin. I mean, we love the narrative of banks collapsing and Bitcoin doing well. But for me, it's more about gold. For me, it's more about, I don't even want to get political, but, like the attack on the Kremlin, that Russia, at first was blaming Ukraine for, and now they're blaming Ukraine and America for. If tensions are going to escalate again and things are just going to become more uncertain and banks are going to keep on collapsing and, countries are going to keep moving away from the US dollar, gold is probably going to keep going up, right? I mean, that's just, it's a pretty easy hypothesis, right? I mean, I don't want any of this disastrous shit to happen, but at the end of the day, I'm just talking about what's happening on the charts. Gold is probably going to keep rising up. People look for gold. People look at gold during times of uncertainty, and that is very much what we're in right now. And if we're looking at that kind of situation playing out within this global landscape, and if we consider that gold and Bitcoin tend to move very similarly, and they have kind of built that correlation together over the last few years, well, where does that put Bitcoin? I think it's quite clear that gold is going to have quite an explosive move up. Probably even this year by the looks of it, because things are going pretty quickly. But if that is going to happen, where does that put Bitcoin? Yeah, probably quite far above its resistance areas, right? Like the resistance on these charts won't matter, if gold starts exploding up, because it would probably mean that, we've almost had like another black swan event, where people have to move their money very quickly to various different places, just like what happened during our last black swan in 2020, where people very quickly were taking their money out of various things and then putting them back into various things, all out of panic. And again, it kind of looks like we might be on the edge of that again. Now, again, the thing I want to say about these banks, right, is like, the government's always going to be there to just kind of save the day, because, you can't just have, millions of Americans going broke because a bank has collapsed, right? I mean, like, obviously that's not going to happen. So I do expect these banks to continue to get bailed out. But the only thing that does is it just creates more inflation. Like when the government is stepping in to help, they're printing cash to do that. And when there's more money, just in the circulating supply, that is eventually, it might take a while, but it is eventually going to mean that the prices of assets go up. And it doesn't mean you're making money. It's just because the overall value, the overall power of money is getting weaker every time these banks get bailed out, because obviously money is being printed to do that. So, there's no two ways about it. I've been saying this for a while. The most obvious direct things that are relevant in these markets, in terms of inflation and the things that cause them, are all pointing toward all asset prices rising, not because they're bullish, but because of inflation, just because they have to adjust to the new circulating supply. So obviously that's what's happening to gold. Again, this rally that we're seeing for gold right now, in my opinion, I mean, we'd have to go above $2,500 and we'd still just be catching up to inflation. We wouldn't actually be enjoying any real price action. We wouldn't actually be enjoying any real monetary gains. It would just mean that gold is catching up to the gains that it didn't have, that it was supposed to have over the last 10 years. And that's just what the data is pointing towards. That's what the actions are pointing towards. It's what's logical. I've tried looking at it other ways, but to be honest, this whole, kind of line of argument makes perfect sense. And it's already been working. We've already seen the result of it. We've already seen Bitcoin double from its low. We've already seen gold set a new all-time high. Like, I can't stress this enough. Everything I'm saying has already started happening. Like we're in it right now. It's not something that's a distant event. It was previously, and that's when I was warning you guys to make sure you're prepared for it. Make sure that you've got your plans you've got your plans set, you've got your strategies outlined, that you've got that you're signed up to whatever exchanges you want to be on, so that you're ready to trade when the time is right. That's all gone now. We're in it right now. We are in the trenches right now, basically setting history. This is a big deal. So of course, yeah, there's going to be a lot to take into consideration here. The dollar is still just like right on the floor, just getting ready to roll over again. It's not screaming confidence at all. Like I said, it's still possible for it to bounce because it's a support area. But at this stage, that's going to start looking surprising, if we do this for a little bit longer, because we've been stuck down here at the floor for a while. If we measure it from here to our current day, we've been here for about a month. At what point is it enough consolidation and the floor is just going to give way? We've already tested it substantially 3 times over here, four times if you include that first one right there. Is it going to be attempt number 5 that breaks, or is it going to be 6 or 7? I don't know, but what I do know is that each additional attempt at breaking that support area, we're going to have a higher probability of actually falling through it. So, that is something to keep in mind. It's probably going to have a positive impact if the dollar falls on things like the S&P 500, on things like gold. Speaking of the S&P 500, we've only got about an hour until this trading session closes, and where are we? Right at the bottom of our current consolidation range. Look, as long as we don't lose this level, the S&P 500 is in an incredibly strong position. Okay, it's consolidating right at a high where previously we got a big rejection. This time the market can't even push us down. All right, I'm only trying to analyze between the lines. I'm just kind of trying to look between the lines to understand what's going on here. And what I'm seeing very clearly is that the first time the S&P 500 got up to this high, we fell down by 9-10%. The second time, we only fell down by 3%. Guys, what does that tell you about how strong this index is looking? It tells me a lot. It tells me that it's looking pretty damn good. It tells me that it's looking like it's in a really strong position. So again, when we're looking at all of this setup just kind of come together, to me, and the fractal, man, like this is, it pisses me off. Like it pisses me off how much it's like accurate, and like I kind of wish that other people were talking about it so I wouldn't feel so crazy about this, because I'm not the guy that goes parading fractals, like I'm the guy that just kind of sticks to like normal basic horizontal levels, but I can't ignore what's glaringly obvious right in front of me, which is that we are forming the exact same fractal that Bitcoin had formed before. And it's just that simple. And that's probably what I'm happy to kind of round this video off on, is just again to highlight for you guys the sheer similarities, with Bitcoin now versus back in 2020. It's creepy, guys. It's just downright creepy how closely Bitcoin is following its history here. Like it doesn't happen this closely usually. And I really think that there could be something brewing here because of that. We got the, I think that where we're at right now is like this move right here with our weird kind of triple top. This move right here was probably this one, and now that we're kind of down and back up, we're probably like around over here. I don't know if we're going to follow the same time frame, but if we are, that means, probably as soon as, the next like 3 days, maybe, not later than the 10th of May, so kind of within like the next week, we may be looking at this, kind of breakout, take fold. And guys, if that happens, what that means, what we're looking for is a break of this high here. If we break this high at $30,000, it means that, we're basically doing this right here, right? And if we kind of play this chart forward and look at what happened afterwards, we did consolidate for a little bit, but that was it. We fucking flew. And all it takes, like, to confirm the fractal and fulfill the final, I guess the final step would be actually rising up, but, the final step before it gets fun, all we need to do now is clear this high. We probably need to fuck around here for a little bit and then clear this high. That's it. That's it, right? Literally within like the next week, this could happen. And if it does and we clear this high, I'm going to have to assume that we're following the same fractal, because everything up until this point has been more or less exactly the same. Really, the only material difference was that on this occasion here, we fell down to the previous highs, But on this occasion here, we fell down to the previous lows. That's it, right? We didn't bounce off here. We bounced off the lows. That's it. That's the only difference that Bitcoin has got with this fractal, and then I guess you could say that this kind of period of consolidation is shaped a little bit differently, but it's still telling you the same damn story. It's still telling you the same damn story, which is that the price is consolidating here, getting ready to make a big move. And again, it's just considering all of this stuff within the background of these banks collapsing. Could it mean that Bitcoin sees another couple $1,000s, to rise up? Very, very much so. It very, very well could mean that is exactly what we're going to see. So I will be keeping my eyes peeled for that. And of course, I will be ready to trade these markets and slay these markets right here on BingX and Bybit with you guys. So if you are interested in taking advantage of these offers, Bybit is still offering you up to $30,000 in just straight cash, just straight money that they're going to give you to trade with, which is very, very cool. You can deploy that money into the market, and if you make any profits with it, it is yours to keep. And BingX is also offering you over $5,000 in bonuses, but with access to these markets which you can trade. So you're going to be very interested in this if you're interested in the American markets. You've even got Coinbase available to trade, but Airbnb, I think I saw like Coca-Cola here or something as well. Yeah, right here. So there's so many markets available to trade right here on BingX, all with a Bitcoin deposit and without even using any KYC. They're not going to ask you for a picture of your ID. They're not going to ask you for a selfie. They're just going to leave you the fuck alone and trade the way you want to. And you have got more than enough as far as withdrawal limits go as well. Great liquidity, and of course 100% proof of reserves. Guys, I wouldn't be using an exchange like this if they didn't demonstrate proof of reserves, if they didn't have the right liquidity. It's got to be suitable for me. I'm pretty diligent, as you guys have probably seen by now, and they've actually got way more than 100% of their assets in reserve, which is absolutely fantastic. Definitely puts them in a strong position. So it checks the boxes. It's worth checking out whether or not you're affected by the KYC news, but especially if you are, you have less than 4 days now. So this is a big deal. A lot of people in the past, in situations like this, including myself, have found themselves in situations where something was coming that would prevent them from trading, but they just kind of didn't take it seriously. They just, it's a bit of effort, right? I mean, in this case, it's like 20 seconds to sign up. It's super easy, It is still a bit of effort, and it kind of stops them from doing what they need to do. And then the deadline hits, and it doesn't matter because they still don't want to trade. But then, 5 days later, I've been in this situation where I wanted to trade, and it was an urgent opportunity, and I wasn't registered. I didn't deposit any money. I just wasn't ready to take advantage of it. And what a shame, because as traders, we get very fucking lazy. But time is our most valuable asset, and if we lose it, if we're not prepared, that puts us in tricky positions. That's why I always say during low periods in the market like this, it's not even about the exchange you're using. It's just about staying prepared. It's about making sure that you are ready to go right when the market picks off. You should not be stumbling when the market starts flying. You are ready to go, charged at 100%. You are that Tesla that has been plugged in your garage, and you have just been hooked in there, and you're ready to go. As soon as the market lifts off, that's you pressing the button, unplugging the Tesla, and you're flying because you're a Tesla, right? You're going quick. That's the goal here. We want to be charged and ready to go, and then when we go, we just want to do well, right? I mean, we want to hit home runs, like the beautiful long that I made here, but you also want to hit those stable 30%. So you just kind of want to go out, collect your money, come back. That's the trading style that I like to take, and it has definitely served me quite well so far. Let's take a quick look at the 4Flies dashboard before I sign off for this YouTube video. The next FOMC meeting will happen in the middle of June. We're looking at a fear and greed rating of 64, which is definitely quite high. Retail long and short ratio is a little bit skewed towards the long side right now, showing us that the market is a little bit bullish. We are seeing quite a lot of top trader long action, though. It actually looks like a little bit less than last time, though. If I'm not mistaken, it was 55% long last time I checked this, but I might be mistaken about that. But we are seeing majority bullish sentiment in this market for sure right now, which is concerning. Again, I've been saying that a bit of a liquidity grab down to 25 would make a lot of sense before continuing on up. That is exactly what we did right here. I don't know if you guys will remember this, but we had this beautiful trend line that was supporting Bitcoin for quite some time. And we just and this was the trend line that Bitcoin should have bounced up from to form this rally, but we just kind of like dipped out of it for a few days. It was no big deal, and then we came back up. That was literally all that happened, and maybe Bitcoin does something like that now. I don't know, but that's what Bitcoin did in the past. So if we do fall down to 25k, I really wouldn't worry about it. If we start breaching these lows, it's just not something that I'm concerned about at this stage in the market. We don't have to do it. Ideally, we won't. If we're gonna continue following this fractal, then we kind of just need to hold our ground for another week and then start rising up. And again, it's gonna be if we clear that $30,000 level right here, bang on 30,000. If we can clear this high, we're gonna be in a really good position. Of course, if we clear this high at 31,000, and that's all the confirmation we can possibly get, that tells us we are very, very, very bullish indeed. So I would definitely expect a strong move if we cross 30k, and I'm going to become even more sure of that if we cross 31k. And I would have to expect that we rise deeper into the mid 30s, maybe even high 30s, purely because we've been stuck sideways for so long. This is what I was saying to you in yesterday's video, is that the fact that Bitcoin has been sideways for so long now is a strong indication that a big move is about to come. The last time this happened, we were sideways for about 60 days, and we were in a very similar range from low to high. We were looking at from low to this high, not the wick. We were looking at like a 13-14% range, and again right now we're looking at more or less the same kind of price range for Bitcoin, if we are just kind of trading sideways in a range. So it's really similar right now. In so many different ways, Bitcoin is repeating what it's already done. And it's gone pretty well for Bitcoin the last time this happened. Obviously, yes, granted, now we are at resistance. Before we weren't really at support, to be honest. It was a weird price level to bounce from, but it's very clear is a resistance level, right? So this could definitely turn into a problem, but so far there's a lot of other things that are going in Bitcoin's favor. So there you go. That's me. I hope you have enjoyed this video. If you have, you know exactly what to do. Take advantage of the $5,000+ in bonuses available to you with BingX if you're affected by the KYC news. If you have enjoyed this video, you know exactly what to do. Hit up the likes, subscribe, tick the bell, all that good stuff. And of course, make sure that you're there in the top link for the 𝗬𝗢𝗥𝗙𝗟 daily channel, because that's where you're going to find me right after this YouTube video. All right, I'll see you there. Cheers. Bye.